Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're having a look at the 46th COT report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. As you may see, we have the 5-year note on top of our list with a 19% change in commercials positions. You can see this change is a bit larger than average, but we have seen such changes in the past. What it says is that prices should decline in the next couple of days. But of course, we always have to look at the wider perspective, which I usually do on the 5-year chart, and you can see how extreme this market is. And as you may see, we're just moving away from a very significant bullish COT extreme, which means although the change signal is bearish and possibly will push prices lower, you have to keep in mind that there's a very large stress level in the market that suggests prices should start shifting to rally mode in the medium to longer term. So it's an interesting situation. If you're a day trader or you look at markets in a shorter time frame, of course you can definitely take the 19% change signal into consideration. Some people who look at a wider perspective may think differently. Okay, our next market is the crude oil. Similarly to 5-year note, we have a 19% change. Let me scroll down so you see all of the COT charts. You may see there's a more significant change in small speculators positions, 26% as you may see. So this is a bearish COT change signal, a bit larger than the one we had last week. And you may see that prices have actually gone much higher on Friday, and that means maybe there could be a little bit of decline early next week. But again, we're going to open the 5-year chart and see that all-time COT extreme. This means both commercials and large speculators have never been at such extreme levels in the past in the whole COT history of crude oil. This means this is a very significant bearish extreme, suggesting prices should top out sometime soon, and we should see lower prices. So in this case, opposite to the 5-year note, we have both the bearish, both the COT change signal and also the COT extreme signal, telling us we should be prepared for lower prices. Our next market is cocoa with a 18% change in commercials positions. You can see that change over here, again larger than average and bearish. And you may see that basically large speculators a few weeks ago have turned net long, and commercials roughly at the same time became net short in this market, while small speculators are always optimistic, at least if we look at the past 52 weeks. Let's open the 5-year chart and see what that tells us. And you may see that we had a pretty significant bullish extreme mid this year, which resulted in higher prices, and now we see a move away from those bullish extreme levels. Now you may ask whether we've reached that bearish extreme that will push prices back down, and my answer is no. You may see this 5-year chart. In case of commercials, we would be talking about close to 100,000 contracts net short level, and in case of large speculators, roughly 80,000-90,000 contracts net long level. Now we're pretty far away from those levels, which means although we may see a bit of a decline in the near term, I'd be expecting further rally in cocoa market. Let's move on and have a look at large speculator COT extreme. We talked about crude oil. We also have heating oil with an all-time extreme. Of course, similarly to the crude oil, it's a bearish extreme. We're not surprised since the correlation of these markets. So very, very similar picture. These markets are supporting each other. Energy markets basically are at an extreme, that's for sure. Let's just move on and have a look at the Swiss franc 232 report extreme over there in commercials, in large speculators. Here we go, 101 in commercials. But as you can see on this 5-year chart, that basically means that we're at an extreme, and it's quite easy to see the past 4 extremes that happened. And let's see what what they done to the market. The last one was back over here the end of last year, 2016, and that coincided with a bottom. Then the one before was basically just a year before that, the end of 2015, and again we're talking about a bottom. And the one before, again, almost a year before that, was the end of 2014, and you can see that again was a bottom in the market. And we scroll back to 2013, which again was a bottom in the market. So if your question is how effective COT Extreme signals are, I believe I answered that. So let's just move on and have a look at corn, our last market for this review, with a 210 report extreme. We are talking about a bullish extreme. You may see that this extreme can become even larger. If you look back over here in 2013, we had an even greater extreme in the market, which is you can see quite visibly that was a bottom in the market, and after that we had a rally until we had that bearish extreme. So of course I could also show you examples for bearish extremes pushing prices down. So now we're talking about a bullish extreme, and we should expect prices to start going higher in a couple of weeks or month, but definitely you should have your eyes on corn. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.